Hi, welcome back. Our previous lesson was on the problem with market power. Today we'll be moving on to economic versus accounting profit. So economic profit and accounting profit are two different measures of a firm's profitability, each providing a distinct perspective on financial performance. So we know that for any firm, the profit of the firm is calculated as the total revenue minus the total cost. So let's start with counting profit. Counting profit is the total revenue minus the out-of-pocket financial cost, which we call the explicit financial cost. So explicit financial costs include rent, it includes wages, it includes the cost of raw materials and other physical costs that the firm incurs. Accounting profit can be simply stated as total revenue minus explicit financial cost. Let's look at an example. So if you have a firm and the total revenue of this firm is £500,000 per year, and the total cost, which includes the cost of wages, rent, raw materials, and other physical costs that are incurred. So if the total cost adds up to, for example, 300,000 a year, then your accounting profit is simply this 500,000 minus the explicit financial cost, which is 300,000. So in this example, the accounting profit is 200,000. Now let's move on to economic profit. Economic profit, it goes beyond accounting profit by considering not just the explicit cost, but also implicit cost. So what do we mean by implicit cost? So implicit costs are the opportunity cost of resources employed in a business. So an example of this is an honest time and the foregone earnings from alternative investment. For example, if you are currently employed and you are earning maybe £300,000 a year and you are thinking of quitting your job to start your own business, then launching your business will mean you are foregoing your annual income of 300,000 a year. So in this case, the opportunity cost of running your own business is 300,000 annual income that you forego. So the question you have to answer here is that if the expected annual income from the business you plan to launch is going to be bigger than this 300,000 a year, then it's a good idea for you to quit your job and launch your business. But if the expected income is going to be lower than the 300,000 a year, then it's not a good idea to quit your job and launch your business because you run at a loss. So the point here is that the best decision for you depends on your opportunity cost, which goes beyond the explicit financial cost incurred. So economic profit, it focuses on the total revenue minus the explicit financial cost and then the implicit opportunity cost. Firms usually focus on economic profit because it tells them whether it is worth to start a new business or not. And economic profit says that you should start a business only if you earn a positive economic profit. So positive economic profit means that you are not running at a loss. So let's look at an example of economic profit. Let's assume that in order to start your business, you have to quit your job, and your job is currently paying you £150,000 a year. And apart from that, in starting the new business, you have to invest £100,000 in this business. Now, what you can do with this £100,000 instead of investing it in a business is probably keep it in a bank and earn 5% interest on it per year. So this means that the opportunity cost of starting your business is in two folds. First is going to be the foregone wages. So you are no longer going to be employed by someone else. So you're no longer going to get the 150,000 salary that you get a year. plus, because you have invested £100,000 in your business, instead of putting it in a bank and earning 5% interest on it, you have forgone the interest that you earn if you had kept the money in the bank. So if we calculate this, your forgone wage is £150,000 a year, and the interest is 5% of 100,000. Your implicit opportunity cost in this case is going to be £155,000 a year. So let's combine that to your explicit cost and see what your economic profit is going to be. So if we assume that your total revenue is 500,000 and your explicit financial cost is equal to 300,000 a year, then what is your economic profit? So we know that economic profit is total revenue minus explicit financial cost minus implicit opportunity cost. Our total revenue per year is 500,000. Our explicit financial cost is 300,000. Now, if we were looking at counting profit, this would have been enough. That was 200,000 in the example above. But if we add our implicit opportunity cost, then this is going to be minus 155,000. So in this example, your economic profit is going to be 45,000. So with this economic profit, we have a question here, which is, should you start this business? And a simple answer is yes. The reason being that every time you are earning positive economic profit, then the business is worth doing. But if we had solved this and ended up with a negative number, then it means that the firm is earning a negative economic profit, which is essentially running at a loss. So it will not be worth starting the business. So this is all that we have on our lesson on economic versus accounting profit. Our next lesson will be on average revenue, average cost, and your profit margin. If you enjoyed today's lesson, consider subscribing. Thank you.